Hey, what's up, guys? As a number of daily cases continues to increase, it looks like we might be heading for a ride of the second wave. In this video, Raoul Pal will give his economic prediction and what he thinks might happen to the market in the near term. Since the illness started, not much really has changed besides Fed printing massive amount of money. The illness continues slamming people's livelihood and throwing millions into the world of uncertainty. The unemployment rate skyrocketed to unprecedented levels. The real unemployment rate is way about 20% and most likely will continue to increase as businesses now again closing their doors. The federal government payment program of $600 boosting the weekly unemployment benefits planned to come to the end by the end of July. What interesting is, if you look at this chart that comes from the commercial department release data that's showing the personal income surged over 10% as consumer spending plunged by 13%. The steepest drop we have ever recorded due to the lockdown keeping Americans at home. So income for most of the Americans went up since they make more money sitting their asses home instead of working. But at the same time, people cut their spending drastically, which will have a negative effect on velocity of money. Less money will be in circulation, the more clogs we will see in our economy. Just imagine when you clog your toilet. This is exactly what our economy might look like if the velocity of money drops. Many people also scaled back their spending as many of them got laid off. The savings rate skyrocketed to 33% as the share of personal disposable income reaches all record highs. At the bottom of the dot-com bubble in 2001, savings rate increased till 7%, while in 2009 at the bottom of the housing bubble, savings rate increased to more than 8%, and right now it's 4 times more than what we have seen during the 2009 financial crisis. A White House advisor said Sunday that Trump administration is preparing for possibly a second wave in this illness as 29 states and US territories seen an increase in their 7-day average of new reported cases after many lifted restrictions in the recent weeks. If you look at this chart, number of daily cases is definitely not decreasing, but it looks like soon we will reach new all-time high in number of daily cases. We also see a massive acceleration in daily cases in countries such as India, Brazil, Russia, and so on. Worldwide cases soon to reach 10 million, as a number of daily cases throughout the world goes parabolic. So I do not think it's a secret that the second wave is up on us. The question is, how is this going to affect the United States and worldwide economy? Let's have CEO of Real Vision Raoul Pal give us his own opinion what might happen in the economy in the near future.
The thesis that I've been carrying around and I'm observing in markets is obviously the US second wave. I've always said we will probably see further issues and further shutdowns elsewhere in the world.
Yeah.
And that seems to be playing out. I mean, the extraordinary story today of Apple closing a bunch of stores in all of those states. I'm not interested ever in, the arguments over the death rates or the ICU rates. It's behavior that we care about. That's what drives markets.
Right.
And if we start to see shutdowns of retail, change of consumer behavior patterns and stuff like that, well, that's going to have a knock-on effect to the economy and also a knock-on effect to the stock market, which is a more behavioral voting mechanism, as it were. Fascinating. Again, we've just seen that, parts of Beijing have closed down. All kids don't go to school. And I use the TomTom data, which is similar to the Apple mobility and everything else. And it confirms the same thing. Suddenly, the human behavior in Beijing changed dramatically and immediately. So flights are empty. All the flights got cancelled. Then you see that foot traffic has collapsed. Traffic on public transport's collapsed. Michael Pettis put out a long tweet about that today. It's fascinating. And that, I think, is something I highlighted from the beginning. This thing is lingering. It's not going to go away because there is no vaccine coming yet. And so we have to deal with these rolling shutdowns. And my guess is Houston will end up closing down in the next 3 weeks because it's pretty much out of control there. Yeah, and we're seeing some really accelerated rates of growth across. So the United States is now almost back at peak daily counts. It's just a very shade below the peak, but I think we're going to be accelerating through it as we go because, because of the decision that's made about the reopening and what does it do to human behavior, and secondly, what does it do to ICU beds? So the reports this week were out that Arizona's ICU is already 80% full.
Yeah.
I have more concerns, even though Texas has a great healthcare system. Let's see what happens with Texas. I mean, they're already reopened. I think there was a football pitch that they were going to use as a hospital. They didn't use it first time around. They're now kind of dusting it down again, just in case that they need to have emergency hospitals. Yeah, I mean, we've got the whole of South America is in trouble. We have India in trouble. We have Russia in trouble. So there's some really big cases, and the US is by far and away the global leader. There was a very interesting charts that were going around today showing the difference in curbs between Europe and the US. So Europe had a hard lockdown. Europe managed to get most of its RO down below zero. The US, as of today, I think 30 states have ROs above one. I'm sorry, Europe got their ROs below one, but over 30 states have an RO above one now. So usually that means we're going to see a accelerated rise, whether it's exponential or not. I'm not going to argue with people over that, but an accelerated rise. It's not just a one event. It's an ongoing, rolling, morphing event. We'll have to see. So I think the markets are going to realize this soon. It feels a lot like that February period when the markets didn't realize it. I'm also noticing there's a lot of solvency issues rising. The number of bankruptcies are rising. As we've all thought, this situation seems like it's a lot further to play out. Again, this is a theme that I've brought in most of the daily briefings, is my thinking around how central bank actions have been phased. The Fed went first and large. Okay. Everyone's like, the dollar's going to collapse. And we've got, coming up next week, Brent Johnson and Lynn Alden to talk about the dollar bull versus bear argument. But for me, what's really interesting here is the Fed did theirs. The dollar weakened a bit. Now the ECB, the Bank of England, and the BOJ are about to hit hyperdrive with their printing. So I just have a feeling that it's going to be interesting as that starts building. I'm also very interested in the fact that already I don't think the Europeans will have done enough to deal with the size of the economic damage that they've taken and the solvency and liquidity events that they've got. The European banks don't trade great. And I imagine that 3 months down the track, we're going to have to be looking at more. So while the US is probably less likely to do that and more likely to do fiscal stimulus. So let's wait and see. But it's a very interesting time, I think, as the real responses start ramping up and the ones that go on. Because if you remember, after the financial crisis, the responses were going on for several years afterwards. The European banking crisis didn't happen until 3 years after. So yes. I think we've got a lot to go. So it's telling us the next round when they come and say, okay, we've done it for 750, but that was just child's play. What we need to do is another three or 4 trillion. They're not going to get it through. It's just not going to happen. It's just not going to happen. So I'm still extremely concerned about the European banks and extremely concerned. Well, not extremely concerned. I am still negative the euro, even though it got to the top of its range, where I would have been forced to reassess, but I thought it was going to come back down, and it looks like it is. So I've got my focus on that. I've got my focus on, as I said, thinking this window of vulnerability we're walking into now, where the US fiscal stimulus starts shrinking. We've seen what was interesting is that the Fed balance sheet shrunk. Now everyone goes, yeah, but it's only the FX swaps. Yeah, but the FX swaps were part of the global liquidity that have now just been taken away. So again, there is a net tightening of liquidity from the US and a net increase in liquidity from elsewhere around the world. I think that's going to make the market struggle. And then, as myself and George Consalves talked about on Real Vision Plus on our live interview, is that this whole window of vulnerability is also when the Treasury have to issue a load of bonds, and they're going to be taking trillions of liquidity out of the markets. So, I think we've got a summer of withdrawing liquidity in the US and an increase of fear over how big the second wave is, or places like California, it's still the first wave. That's what's coming while stimulus checks roll off for a lot of people. And the unemployment situation is going to get messy here. And people aren't going to understand the numbers for a long time because a bunch of people are going to go back into the work. There's a bunch of people who are going to stay off work. And then if I'm right about solvencies rising, the unemployment numbers will rise again. So, it's a lot longer situation here. And, I am concerned over the next 3 months where I think the markets could be in for a really rough ride.
Unsurprisingly, Raoul Pal still has a bearish view on the economy and the market. Also, very interestingly enough, that he pointed out that not the number of death or hospitalization rates that matter, but what matters the most is human behavior. Consumer behavior has already changed and continued to change, as people feel very uncertain about their futures, their jobs, and of course most importantly, their health. Number of major stores such as Apple closed back their stores, flights are being cancelled, and foot traffic is collapsing, and it does not look like it will get better anytime soon. So let's look at the market. After Fed printed massive amount of money, market got happy and many economists start predicting positive growth of GDP in the second and third quarter of 2020. But let's go back to January and February and see exactly what happened. We already knew that it was a high probability that this illness might spread across the United States and of course across the entire world. But the market closed the eyes on this and swept all the data points under the rug. But as soon as it hit United States, market dropped by 35% in just a matter of 4 weeks. So, as of right now, what it looks like we might see a similar situation. Market seems to be in denial. But as soon as the real numbers comes out, I do not think even the Fed will be able to save the day. Printing trillions of dollars on a weekly basis is definitely not a solution. Now what it looks like ECB wants to follow the footsteps of Federal Reserve and start printing trillions. It will be very interesting to see how all the situation will play out. Let me know, what do you guys think? Do you think we're about to see another market crash? Leave your thoughts in the comment section below, hit that like button and subscribe if you haven't.